Well, it's official. Apparently, per the Fed, inflation has peaked. We got the 8.5% inflation reading, which is down from 9.1%. So they're trying to tell us that inflation has peaked by about 0.6%. Do I believe it? I don't know. Not really, to be honest. But most of it is interesting because if you look at the breakdown, the biggest decreases came from fuel, car prices, and I think phones and shelter, apparently. But if you look at food and pretty much everything else, it went up, especially food, a pretty significant amount. So now that fuel has pretty much stabilized, I mean, it's coming down a little bit still here and there, but it's not really going down and up or going down like it has been. It'll be interesting to see what this next CPI does. Um, it's also interesting too if you listen to any of the Fed members talk today or just the highlights from them. They're still calling for 50 basis to 75 basis point hikes this September and November, and saying that they might not even stop rate hikes in 2023. So to me, that tells me they don't think inflation's under control if they're not ready to pivot off of rate hikes yet. So I think some of that had to do with why we had the huge pre-market run-up on the news, but as you see, we didn't do anything today. We just traded between 417.5 pretty much and 420.3. I mean, really, our range mostly was this 418.8 to, I mean, really 419.6. I mean, it was a tight range. Look at this, all day long. So it'll be interesting to see what tomorrow brings. I do have a couple theories on that. So, I mean, overall today was a very low volume day. I mean, we're going to probably close under the 30-day average volume, which is pretty low. We only had a $3.42 total move today, which is only 53% of the 10-day average. So, I mean, that's pretty low. So it'll be interesting to see, since we didn't really have the volume that you would think would come in on a CPI day, what happens tomorrow and Friday. But let's go ahead and jump into it here. So we have the daily here. The daily is quite interesting. Key takeaways from today. This daily 8 EMA is interesting here. You see that it was pretty much curving, and with this massive gap up today, we actually have it following this trend line. Anytime that 8 EMA on the 15-minute or the daily is following one of my trend lines, you know that's a key trend line. That happens quite often, and that's how you know it's a very strong support and something you really need to keep an eye on. Overall, we have this big red rising wedge right here. This is the one I'm watching the most, obviously. We pretty much perfectly rejected it today at that 420.14 was our high of the day. So I'm going to be watching this tomorrow. The resistance for that for tomorrow is going to be 421.2, and this 419.9 really was a pretty strong resistance all day. So these are going to be the most important resistance tomorrow. If we blow through 421.2, then we're going to be looking up here closer to 423.7 for the next resistance. We do have the gap down here, obviously, which goes all the way down to 412.75. It's about a $3 gap, $4 gap, $3.97 gap. So potentially we could see that filled tomorrow. I don't really put my hopes in that. As you can see, we have the gap down here still, and there's even a little gap right here still. So, and those go all the way back to June and July. So most likely, is my guess, is we're just going to continue trucking on, and then whenever we finally get some sort of meaningful retrace is when we'll fill these gaps. But when that's going to be or what's going to cause it, I'm not quite sure yet. So, but now we officially have 3 gaps down below. So that's something to keep in mind. The one thing that I really liked bullish-wise about today, even though to me it was actually kind of a weak day, is that we clearly held support at 417.5. We quickly at open try to jump down through here, but then we bounced and we never closed a 15-minute candle below that 417.5, and I think that right in and of itself is a pretty bullish statement made today. I was saying before that I think whichever way a candle closes over first will be which direction we go next. So I wouldn't be surprised to see another back test tomorrow of that support. And if it holds, then I'm definitely going to be looking for more like this 430s up here. Now, if we fail and tomorrow we fall back through this gap, then I'm definitely looking down here towards 414.6 and 412. 412 has been pretty much the strongest support and the biggest area that we have traded around. So if we do break through and fill the gap, that's where I'm expecting a bounce. It's possible we could fill it tomorrow. I mean, it's a pretty big drop, so it would take a lot of effort to do it, but it would be almost a 2% drop. But if we do drop tomorrow and gap fill and we bounce off 412, that's where I would definitely feel comfortable buying a call there, thinking that we're going to go back up. Other than that, we don't really have a whole lot going on in the daily anymore. So a couple of things I'm looking at long term here now. If we can get through this rising wedge, then we're more looking at this next black dotted rising wedge right here. I had it earlier, but there's a projected just actual channel, which we can kind of see here if we just do it, where it puts us at here. Kind of basically, kind of makes it tough because there's not a great area to do it off of that really lines up with it. Kind of lines up there a little bit, but either way, I mean, you can see this might be the new potential bull channel, but it would take some like real breaking out to make that happen, which I don't really suspect is going to happen. But we're now in the next level. We broke through that key 417.5 resistance. So this now is support. So resistance is turning to support, which is a big deal. So now our new trading range that I'm going to be keeping an eye on is 417.5 to 429.5. So interesting thing about here, the last time it was here, we saw we had these massive candles. I mean, every candle was just an unbelievably big day. I mean, this was a 3% day, this was a 3% day, 2.5, 0.28% day, 3% day, 0.58% day, 2.7. So every time we got in this range, we've had some just massive candles, even back here, just big old candles. So this will be interesting to just kind of see how we trade. The one thing I am seeing here now that I'm looking at this more is this hanging man right here. This could be the top. We haven't really seen these play out too much, but the last time it played out was May 17th. That played out very well. You can see we had these big run-ups, and then it put a nice hanging man in there and dumped hard. So there's been a couple other times that I've been watching this pattern, and it really just hasn't played out very well on SPY lately. So the one thing I was watching today being that overall this was a pretty easy day for the bulls. They should have been able to run this to a 3% day. I mean, 2.1% is nothing to joke about. That was a pretty big green day, obviously, but I would have suspected end of day that they would have broke through this 420.3 and taken us up, somewhere closer to like 420, over the low to mid 420s. But I mean, up around this support resistance or something like that. But they really just kind of died out. So I don't know if the bulls are finally actually getting exhausted or if this was just kind of one of those rest days. But just kind of have to see what happens. But if I had to guess, I think we do see a small retracement tomorrow to kind of retest this support. I mean, a support bounce at 414.5 would be a pretty bullish also if we get that low. I mean, we might just build another support here at 417.5 though, and then continue up. So those are the levels I'm watching the most. Now the weekly, we also have this rising wedge right here, as you can see. On SPY, we have tested the actual support on the weekly, so that's pretty good there, held pretty nicely. The next level that we're going to be watching on the weekly is 423.4. That's the next resistance. That's kind of a big deal. The other thing I'm noticing is that I was talking about this all week, this little pattern that we had here. We finally broke out of this pattern, and we're over this 415 level. That's very bullish. However, we're putting in a hanging man now on the weekly chart, which can be quite bearish going into next week. So this could be seen as a top candle, especially after more or less a doji last week. So if we hold resistance, there is a chance of retracement next week, but with such strong bull momentum right now, I still have a really hard time going against that thesis right now. Even if you don't want to go long on calls to play the 430 that's probably coming, I would not advise on going in on puts at all right now. We need to see some sort of strong break in SPY and especially in Apple and the VIX before I would recommend ever going long on puts right now. The other important thing here is if we do close over this 415 level, the next level to really watch is this 430s. So this 430 level right here, you can see where this basically is like massive breakout triangle right here, using January's high and then the March rally's high. So if we come down here, you can see for this week, which I don't really think we're going to get there. I don't think they have the momentum. It'd be another $15 of trading, so about just under 4%. I think it was like 3.6% from close to get us over 435, to essentially signal that the bear market's over. Once we break this resistance line, to me, the bear market's over. I mean, we've broke the overall downtrend. Now, that doesn't mean we don't go up here and like reject, 450s or something and then come crashing back down when something crazy happens. But if we get into the over 435, to me, I think the bottom's in. I still think regardless of what happens at the bottom's in, but that's something to keep an eye on. Now this week, if we don't make it there, which I don't think we're going to, then we're looking already at next week, this 432 level. Not only is that weekly level resistance, but that also lines up pretty perfectly here with the actual breakout triangle. So there's a chance we get up in this 430 range, like the low 430s, and we touch it, but we don't go through it, and then we start trailing back down here. Because with a breakout triangle, you see we bounced off it, kind of bounced off it. So this is something we could do. We could come hit it, kind of fall back down, hit it, and then dump. So just something we got to keep an eye on. But important support to watch the rest of the week is this 415. If we get back under 415 tomorrow, especially, which would be about a percent and a half drop from close, then that is more bearish going into the weekend. So I don't really have a good sense of direction right now. The low volume on a very good newsworthy day kind of throws me off a little bit, as I don't have a good feel for where the market wants to go. While I feel we obviously are still bullish, the steam is definitely running out. So, but I'm not ready to bet against it. So see if tomorrow and Friday especially gives us a little bit more of a sense of direction, but I'm just sticking to my intraday playing level to level, moment to moment. So then we have futures here. So futures has the exact same thing going. Perfect rising wedge, resistance rejected intraday today. You can see the new daily ES candles already open. So tonight, a key level to watch is 42.22. If we break through that tonight, then you can almost assume tomorrow is going to be a pretty green day on SPY if we break that resistance, because ES and SPY, they kind of go intertwined together. Key support here is going to be the 41.84, which is that daily 200 EMA. So these are the most important levels to watch tonight and tomorrow. We could, I don't think is going to happen, but we could form a pretty massive double top right here, kind of something like you see right here, or especially like you see right here. But I'm not quite sure. Actually, I think this is what I was talking about on the daily over here with the hanging man. Yeah, so when I was talking about it, which actually is kind of setting up nicely for it now that I look at it even more, you have May 17th right here, and today obviously. Candles are pretty similar, and you go over to futures, you have May 17th right here. We even got the day before candle kind of similar. So that's something to keep an eye on. We might get that boost up to 422.22 or 42.22 and reject, and we might see a pretty red day tomorrow. So this was a killer red day. Oof, negative almost 4%. That's crazy. Haven't seen one of those in a long time. So key levels to watch for sure. Futures weekly, pretty much the same thing. We have that key resistance for the weekly is 42.30. 42.30 to 42.35. It's kind of hard sometimes to tell with these dotted lines exactly where resistance is. And then support, that's most important, is this 41.61 level right here, 41.60. So keep an eye on those tomorrow. Same thing, we don't really have a great direction of where we're going, if we're going to break out towards, 43s, 45s, or if we're going to come back down here into 39s. But by tomorrow, definitely Friday, we'll have a better picture. This level right here is my pretty much line in the sand on both futures and obviously on SPY. Depending on where we finish with these levels will kind of determine where I think we're going next week. Apple's just kind of that, it's like that goldfish you just can't kill. No matter what you do to it or what you don't do to it, it just keeps going. It doesn't want to give up. So this was that rising wedge. This is kind of similar to the one that's on the daily charts right here. So it almost makes me think we're going to break out of this tomorrow just because it's similar but different. But Apple and SPY have lately been behaving a little different. Today was actually quite interesting during the day. Apple just kind of fell down. I mean, it got up here. It touched this resistance line. I'll zoom in a little bit here. During the day, it touched this resistance line, and then it dropped down quite a bit. And at that point, SPY hadn't fallen. SPY was kind of still holding this level up here. And then about this time period here, about 3 o'clock, we actually saw Apple just kind of take off, and it just gained a ton of steam and broke through all these resistances and closed way up here. And SPY at that moment when it was doing that was actually dumping. So it looked like it was actually about ready to sell off. But then end of day, if you were watching the volume on VOLD or VOLSPD, it just was straight green. I mean, it was nearly vertical. So either end of day, a ton of shorts finally covered, or we just had a ton of people pouring in with buying. I'm not really sure which one it was yet, but we'll see what happens tomorrow. It'll kind of give us a better picture of which one it was. But go ahead and get rid of this resistance line here. So now Apple has two gaps. So we have this gap right here all from yesterday, and then we have, or today I mean, and then we have this gap from last week still. So we're at 1, 2, 3, 4, 5, 6, 7, 8, 9. Be 10, 11. I doubt it fills. So this will actually be, if it doesn't fill by Thursday, Friday, this will be the longest that in 2022 that a gap on Apple has been left unfilled. So that's kind of interesting. You can see we have a very nice, extremely steep bull channel going right here. I mean, it is nearly straight up. It's technically, if you zoom out, a rising wedge, but it's pretty close to a bull channel. Oops. So key resistance tomorrow is going to be right here, 171.7. Key support is first going to be this 168.9, and then it's going to be right down here at 166.5. I'm not really sure which way I think Apple's going to go tomorrow. I mean, overall, yesterday it felt like it was just kind of sitting there. It just didn't want to go anywhere. Today was kind of the same thing. It got its momentum, and then it just kind of died out. And it just pretty much traded all about the same level under that 168.2 until about 2 o'clock. And then it just, from 2 o'clock until end of day, it just was rallying. So I have to be keeping a good eye on Apple. Again, like I was saying, I would not short SPY until we see Apple break. Apple is not broken. I mean, this could be, the wick isn't really long enough. If it was more down here, it'd be more convincing. Also a hanging man, but I don't really think it is. So just got to kind of keep an eye. This is a nice example of a hanging man right here. It didn't really dump super great, but this is like an ideal, perfect, even right here, which is even more interesting because this right here should have been a reversal, but we obviously got that huge gap up. So going over to Apple Weekly, not a lot going on. just keep an eye on 172 if we happen to get another big day tomorrow. I mean, about a 2% day and we could touch that resistance, and then support's way down here at 160.7. Now the VIX. So we have been unwinding for nearly 9 weeks now, all the way back in June 13th. Had a big day today. It bounced perfectly off this support line of the falling wedge. So there's potential that it could bounce from here, but I thought it was interesting that not only did it bounce there, but if you zoom out, I added these lines today to these red lines right here. This is 2021. You can see, like, beginning of the year, we were pretty elevated on the VIX, pretty much stayed right around this 24 to 21.2 level. But after that, besides like a couple spikes up and a couple spikes down, we pretty much traded between this like 15.5 and 19.6 level. Even really, you could be a little bit more generous and say like 16.5 to 19.6. So we actually bounced pretty hard off that level and closed above it. So it's kind of interesting. Most of 2022 has been traded. Honestly, most of it, if you look at it, I mean, the cluster of it is pretty much over 25.5 to 34.6. So they're really, I mean, we traded down here a little bit this year, but most of the year we've been spent way up and over the 25. So that brings the question up, because the VIX always reverts to mean. So is the mean, you know, which would be 17.5 in the middle of these levels here, is the mean 25.5? Is the mean up here at 30s? It's kind of hard to tell this year. I mean, we've been unwinding, obviously, which, I mean, it almost looked like this unwinding pattern here before we finally broke out, but got to kind of keep an eye on that and just see where the VIX is going to go. Like I was saying, with Apple in the VIX, I would not short SPY at all until we see this break. And I mean like break. I don't want to just see like a spike like right here or right here. I want to see 2-3 candles in a row. So if we got a big green one tomorrow and then another big green one on Friday, and then Monday we're up in the 23s, I might sell it that we're going to see some bearish movement. But right now, I have a hard time not being bullish. The only hesitation I have to be bullish is that now that CPI is done, we don't really have any big bullish catalysts to really like catapult us to the top. I mean, we have bearish things, obviously, that could happen, but markets like to go up. So trend favors going up just because people have to buy and they have to put money into something. Now, a lot of this buying right now is retail, so that could get interesting if institutions finally pile back in, or if they decide to short, or they cover their shorts and then they go even shorter. So some of that, which all that's going to happen next week on August 19th, is the monthly expiration. That could be the time that we see a little bit of change of pace or changing the tide. So we might see a bullish run till end of next week, and then once people re-rotate. The quarterly isn't until September, but the monthly is a pretty big deal too. And the last time I checked, I'll have to check again later tonight, but the last time I checked, the monthly OI for puts down low was crazy high. So if people are still pretty jacked on there, we might wait until after the 19th, and then we might finally see a sell-off. Tomorrow, the only kind of things to keep an eye on, we have some initial jobless claims and continuous jobless claims at 8:30. We also have PPI in the morning. PPI hasn't been like a huge deal, but it is something to keep an eye on. Next week, we don't really have a ton of big news going on either. We have some more jobless claims, and that's about it. So, like I was saying, there isn't really just a ton of either bullish catalysts or bearish catalysts to really like throw the markets either way. Overall, trading-wise this week and today, I've had a pretty great week. My only loser this whole week has been the Apple swing, which technically that was last week's loser that I hung over until this week. So just keeping an eye on things. I've been using this week especially, and I started using it last week, but I finally started trusting it 100% this week, using the Hakimi Ashley candles, or however you say it, on the 1-minute chart with the 20 and 50 EMA. Using those and waiting for crossovers and making sure candles are basically stair-stepping up, and then also using the Stochastic. I don't know how to say that word correctly. So Stochastic, Stochastic, whatever it is. Been using that a lot, which basically shows overbought and oversold. Using that in the 1 minute and the 5 minute, and timing it with entries based off how I'm seeing the 15-minute candle move around my support and resistance levels has been absolute killer for scalps. So I did 5 scalps today intraday, ranging anywhere from 1.5%, which was a really weird fill, all the way up to 8.6%. I don't know about you guys, but I had some weird fills today on my options. There was quite a couple different times where my ask or my bid was what was like the mark at the moment, and I put the order in and it still wouldn't execute. There was quite a few different, especially buy orders, that I chased for quite a while before it would finally let me buy, which I've never had that happen. I don't know if it was just like a weird issue with Thinkorswim today or something. I've noticed the last couple of weeks that the premiums have been like pretty laggy and moving kind of goofy, but today was like an especially weird day where it happened on almost all my positions, where either I was trying to get into the position and I just couldn't get in like I thought I should be able to get in, or I couldn't get out of the position, which is obviously even worse. So that was something that kind of did hurt me a little bit, but overall it was a great day trading. Just something to keep in mind when you guys are trading. We don't need to go for home runs. I know there's a lot of people that are like, oh, man, I'm down like 5K for the year. I got to make that back. Yeah, obviously we got to make that 5K back at some point, but you don't have to make that 5K back in one trade. A lot of people, I feel like that's how they blow their concept. So they're down like, I don't know, 5K in a 20K account. So like, well, if I just do like one 5K position and I get 100% on it, then I'm back even and I'm good to go. But then that one position for 5K becomes like a 50% loser because they just let it run because like I have to win this position. So now you're down 7,500 on, and now you only have 50 or 17,500 left in your account. So then you try again and you miss again. So now you're down 10,000. You only have 15,000 left. When had you just gone for 5-10% scalps, at even just 1,000 a position? I mean, you do 5 of those a day, 3 of those a day. I mean, that's 300, 400, 500 bucks. And you just keep doing that 10 days in a row, you get your money back. There's no rush out here. People are just in too big of a hurry to make all their money back in one day. If you have a loser, it happens. Move on to the next position. Like me with my Apple put. I would have loved for that to open green today and be able to get out of that green, but it was a loser. I didn't let it affect me. I jumped back in, I looked for a good play, and I got some great plays today. And overall, this whole week for me has been great plays. I've been extremely patient, waiting for my setup, even going back to today. I mean, these candles, especially in here, they're just so tiny. There were some times where my strategy, my entry criteria was met, but looking at the candles, I could tell that we were at a support that I didn't want to wait for, especially in here. I mean, I knew these two levels are key. So like right here was a time where I would think to go short, but I was looking at Apple and I saw Apple running and I saw volume pumping hard. So I knew that was a bad time to go short, even though we finally broke this support here and it looked like we were about to see a sell-off on SPY alone. But volume and Apple came in and changed that. So you just got to be patient. You're not going to play every drop. Like right here, I wanted to buy a call. I was expecting us to kind of bounce down. We did. And I was expecting us to go back up, but I was expecting this candle to close down here and see a double bottom, then go back up. But this candle wicked all the way back up here. And by that point, I had already missed my entry. So, and same thing right here. I saw this breakout. It was actually both candles did it. This one and this one. I was expecting to go up and kind of close here at resistance and then see it drop either with a double top or just see a dump after the next candle. But waiting for the next candle, which I don't like to enter before a candle's about to open because you just kind of have no idea what's going to happen when that new candle opens, especially on the 15-minute candle. By the time they came back down, I'd already missed my entry for a put. So you have to wait. It's okay. And especially with today, I mean, this is a tight range to trade in. Especially with tiny candles like this, it's hard to get a good position and a good play in. There's always tomorrow. There's no reason to be in a rush. Go in with a plan. Stick to your criteria. Stick to your rules. I mean, like today, most of the time, the Stoch was over overbought almost all morning, even up in these levels, or down in these levels here and up in these levels. I couldn't buy a call. I mean, the extreme bull momentum was there, so I knew not to fight against that, or if I did, it was a very quick scalp. But I couldn't bring myself to buy a call because we were so overbought. And I'm glad I didn't, because I followed my rules and I didn't get burnt. I mean, I think many of us expect this to come out and just skyrocket, but obviously that didn't happen. So just be patient, take your profits when you have them, live to trade another day. All right, guys, you have a good night. I'll see you guys tomorrow. Thank you for tuning into this video. If you like the video, go ahead and like and follow me just to support the page. I provided my Discord link here. This is the lifetime link, so sometimes there's issues with this. If you have any issues, just go ahead and send me a message and I'll get you a temporary link that'll work. Some benefits of the Discord is I do a pre-market update with some key support and resistance levels to watch. Throughout the day, I'm on there doing live commentary on SPY and the general market with updates about key levels that are broken. I also do live trade alerts. Currently, it's $20 per month or $228 for the year. If you want to follow me, I'm on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh. Thank you.